Today is going to be a very interesting day in the overall market and maybe for Tesla. It is the last day of the month, trading wise. It is the last day of the quarter, trading wise. It's happening on a Thursday because of a 3-day weekend. And you know how much markets love a 3-day weekend when they can't have so much more that could happen over those 3 days that could affect Monday morning. And then to make matters worse, we've got the PCE actually reporting tomorrow on a day when there's no trading. And of course, the PCE is what everybody's paying attention to right now. Everybody's mostly interested in what's going on with interest rates and therefore with inflation. Now, the good news out of all of that is the PCE is more predictable than the CPI or the PPI, because the CPI and the PPI kind of come ahead of the PCE, and you can take those numbers and kind of shove them in with some formulas and come up with a pretty good guess. But that doesn't mean there won't be surprises. That doesn't mean that there won't be shaky investors out there today wondering exactly how to make themselves look good at the end of the quarter in terms of those portfolio managers and also other folks that just want to be a little cautious going into the situation. Anyway, that's where we're sitting as we start this morning's show. So let's start with Tesla Ronnie. They say, as observed by the Tesla community on X, Tesla has now started advertising on cars.com. That's adding it. This is me talking, adding that to Instagram and Facebook and pay-per-click and YouTube and of course X. So it says here that cars.com is one of the United States' most popular automotive classified websites. They put a large ad on the site's homepage. Cars.com is well respected in the industry and attracts an average of 26.4 million unique visitors every month. Tesla opted to focus its sponsored post on Cars.com on the Model Y crossover, which is the company's best-selling car, and it also is the #1 selling car in the world. The electric vehicle maker highlighted the Model Y's affordable price in its ad, stating that the all-electric crossover starts at just $36,490 after the federal tax credit. Clicking on the link on the Cars.com homepage directs users to Tesla's Model Y inventory page. Anyway, more good news. Advertising is something we've been asking for, and we are now getting, interestingly, going with online and very focused kinds of advertising that can be easily tracked. Okay, Gary Black says this morning, he says, we believe Tesla's likely first quarter volume miss next week may be nearly fully discounted by Tesla's sharp year-to-date underperformance. We expect Tesla's investor relations compiled consensus due out today or tomorrow may right-size the first quarter expectations at around 430,000. That could still be high, actually, seeing a lot of folks in the 420, even as low as 412, somewhere in there. So 430 could still be high, and that could still mean that we get a miss on Tuesday. And is a 412 baked in? I don't know. Bloomberg consensus still shows 460 as of this moment in front of next week's Tesla first quarter P&D production and deliveries. We believe that any delivery number above last year's first quarter deliveries of 423 will be viewed as positive. I don't know, Gary. I'm not sure that's true. Given the one-time first quarter impact of the 30,000 loss in Fremont with the M3 refresh changeover, and he doesn't mention, of course, the Berlin problem. Most people are talking about the China problem, and let's go ahead and take a look at some of that. He does say, though, that they tend to agree with the bulls that see the full self-driving 12.3, etc., and Tesla's 1 month free FSD trial is potentially game-changing, but that doesn't mean that he expects a material change in FSD take rates at the current 199-month subscription rate, or any change in Tesla marketing strategy, supervised FSD rather than full autonomy, which would boost FSD acceptance but also increase Tesla's legal risk. Until then, we remain Tesla bulls, but are holding our portfolio weight at 3%, given concerns, et cetera, et cetera. Well, that made absolutely no sense to me. I mean, yes, the first part made sense that this would be game-changing, but if it's game-changing, how would that mean that the take rate wouldn't go up? So I believe heavily, I sincerely believe, based on well over 50 years as a salesman and a sales and marketing guy, and somebody who's been selling products my entire life. I mean, since I was 5 years old. I just got to tell you that putting a sales rep or a customer service rep in the car for a half an hour with a new customer who's just purchased the car and showing them FSD and giving them a month free is going to increase the take rate. Absolutely guaranteed is going to increase the take rate. Putting people in the car after they've had service, turning on their FSD and giving them a demo is going to change the take rate. Having people right now having amazing results on the FSD and showing their neighbors and showing their family members once again that the car can drive itself is going to increase the sales and the take rate. All of those things absolutely, I believe, are true. Anyway, this is from Dan Ives this morning on CNBC. This is not a direct quotes because he was speaking and I was just taking quick notes, but I guarantee you these are exactly what he said. Dan Ives says they're lowering their price target to 300 from 315. The commentator that was interviewing him, I forget the guy's name anyway, was really giving him a very hard time, saying, how can you be at 300 when the stock is sitting at 180 and not really budging in the last little bit? That's been kind of range bound. He says, look, we're still bullish, but this is code red, dark days in China demand. So he's all about the China demand. He says they're expecting a down on China demand 3 to 4%, as opposed to being up 3 to 4%, which is where he had been previously. Now, remember, I've talked about for a long time, the 2024 results are not going to come out of China. There is no significant amount of additional capacity. Yeah, maybe 100,000, 150,000, and that's important, but it's not where the real opportunity is. So China demand in the first quarter might be a little light. There's plenty of time this year to make up the China demand by other exports as well as the actual sales in China. I'm much more concerned, way more interested in what they do in Berlin and Austin. That's where the opportunities are. All right. He says they're clearly going to need, he's making a recommendation to Elon. Look, when it comes to the first quarter earnings report, you're going to need to lay out a strategy for investors in the earnings call. Investors might start losing faith. We need a strategy. Strategy, he could mean by that some kind of an estimate for total sales for the year. He could just mean, here's what we're doing in terms of advertising, promotion, to talk about the FSD, anyway, some kind of strategic analysis that will help investors understand what's going to happen the rest of this year, even as lots of folks, including Dan Ives, have mentioned, investors are going to start looking towards 2025, where there's going to be a lot of new activity and stuff that's going to be hugely impactful. He says where he was dead wrong was not realizing how quickly the China demand would fall. He believes that the bad news is baked in, and he has an outperform rating right now, which is their buy rating. Well, yeah, because if you're saying it's going to be 130 later in the year, 230. I'm sorry, did I say? If you're saying it's going to be 300 later this year, down from your 315, and it's sitting at 180 now, definitely anybody that doesn't buy, if they believe Dan Ives and they believe that, then you would want to be buying stock. That is not investment advice. What do you think about all this? Well, Reuters says Tesla is expected to deliver 458,500 vehicles in the quarter, according to 17 analysts polled by Visible Alpha. That is higher than the 422,000 units it handed over the same quarter last year, marking a decline of but would mark a decline of more than 5% from the previous 3 months. Since late 2022, Musk aggressively cut Tesla's prices at the expense of margins, helping to boost sales, but frustrating. Many of its customers have seen the value of their cars slump. Yes, we got to take into consideration, again, this whole situation where the prices were absolutely astronomical compared to reality because of shortages of chips and et cetera, where all cars, not just EVs, not just Tesla, but all cars were getting extremely high premiums during that period. And so therefore, yeah, there's going to be a really bad situation in terms of resale values until that washes through the system. This is Randy Kirk. If you haven't done it yet, please hit the like button. No, I mean, really hit it. I mean, stop what you're doing and hit the like button. Help me out here. All right. And hit subscribe, hit notify, because of course, you know who's coming today. It's Cern Basher. Cern Basher is coming with charts and graphs, cool stuff. He will show us really significant impacts. I don't have any idea what he's going to talk about. He doesn't tell me in advance. It's going to be exciting, though, because he does a great job. I'm sure you're aware of that. And then tonight, we do have, as always, Bradford Ferguson coming on. He has been driving the heck out of 12.3, I think 12.3.1. I'm sure he'll have some updates on that, as well as we'll talk about the good news of the day, which who knows where it's going to turn out, because of everything that's happening today, it is so hard to guess. And then lovely if a few of you decided to do a Patreon decision today. All right, from Kobasi, he is saying, breaking, the final reading of the U.S. fourth quarter GDP comes in at 3.4, which is above expectations of staying even at 3.2. So the adjustment in the fourth quarter GDP popped up another 0.2%. This officially marks 6 consecutive quarters of positive GDP growth. He says we have not had 2 consecutive quarters with declining GDP since the second quarter of 2022. He says, does that mean the Fed's on a track for a soft landing? Well, who knows at this point? That's a good question. Forex Live reports this morning that the prior week's the initial jobless claims prior week was revised up to 212 from 210. This week, they come in at 210 versus the 212 estimated. So for that, these 2 weeks in a row, it's really, really flat in terms of initial jobless claims. 4-week moving average is 211 versus 211.75 last week. Continuing claims are at 1.819 million, unchanged there as well. So what we've got here is we have a very, very flat situation with regard to these initial jobless claims, which is a good indicator in terms of the overall economy, but might mean that the Fed will wait longer to make. Anyway, let's talk about this. Is, I know that this is Randy the optimist. I know, you look to me to be always positive. There's some things going on right now that, I got to put them on the table, and we just got to think about these things. This is from Randy, not from somebody else. Gold's climb is almost certainly largely due to central bank buying. We know that they're buying. Lots of central banks are buying gold, including China. And China's also buying a lot of copper right now. People are wondering, why is China buying so much copper? Central banks currently have the lowest percentage of their assets in gold ever, at around 20%. 40% has been the average recently, but right now is at 20%. There's a potential for gold to go much higher if the central banks decide to go back up to this average of around 40. It has not been unusual in history for the central banks to have 70% of their holdings in gold. So being at 20% is just really low, and we've already got gold at all-time highs. Says, I also found out that the current ratio of gold prices versus the rest of the commodities is off the charts high. Historically, other commodities follow gold. So gold goes up, and then, a few weeks later, commodities follow. But commodities are sitting at crazy lows right now, especially in relationship to gold. And this could be a setup for future inflation. Did you hear me? This could be a setup for future inflation. This is the guy who said all last year inflation would go away. We get down to that 2%. And I believe we are at, if we look at core, I think we're down there. We've done it. If take out the energy, take out housing, I think we're there. But what you got is you still have energy and you still have housing, and they do impact. So you can't just look at core. And right now, there's real potential for inflation to raise its ugly head again. Will that be this year? Will that be next year? But at some point, all of this government stimulus from the United States and around the world, you have to pay the bill. And a lot of times you pay the bill through productivity, and you pay the bill through higher stock prices, and you pay the bill through, years and years and years of inflation in that 2 to 3% range. But sometimes you have to pay the bill all at once because the markets just do it that way. Anyway, just something to keep in mind. This is from MarketWatch. Actually, these next 3 articles are all from MarketWatch. In a surprising move, Russia said it will voluntarily cut 471 barrels a day of crude oil output and exports through the second quarter of this year. This is in addition to the voluntary reduction of 500 barrels per day Russia previously announced in April 2023, which extends till the end of December 2024. So they're now almost 1 million barrels a day less than their capacity. They're just deciding not to ship what they could. So interesting that they don't want the income from those oil shipments. The shift in Russia's oil strategy is surprising, JP Morgan analyst said. At face value and assuming no policy, supply, or demand response, Russia's action could push Brent oil price to $90 in April, reach mid-90s by May, and close to 100 by September, they said. This price hike could be further amplified by an even odds possibility of the OPEC alliance extending its June. This is news that I asked the question out loud yesterday. Apparently, the rest of the OPEC Plus alliance have extended its oil production cutbacks to the end of June, but they're asking the question, will they then come out and say, we're going to extend these price cuts to the end of the year? I mean, the production cuts. So the Saudis and the OPEC Plus group and Russia, none of these guys need the revenue. The U.S. oil, the Canadian oil folks, they're pumping and pumping like crazy and making money sitting here at these high prices. Anyway, this is just one more indication of what I was just talking about, gold prices being high. And then you have this cut, which is not natural. It's not normal. It's designed to keep the price high. It's interesting. Maybe we have to watch this very, very carefully. Then this also from MarketWatch, Federal Reserve Governor Chris Waller said high inflation readings and strong job gains in early 2020 reinforce his view there's no rush to cut U.S. interest rates. The most recent economic data tells me that it is prudent to hold this rate at its current restrictive stance, perhaps for longer than previously thought, to help keep inflation at a sustainable trajectory towards 2%. He said over the week yesterday. Momentum stocks are coming off their best stretch of performance in years since just before the financial crisis. This is another article by MarketWatch. Momentum stocks are coming off a big stretch of positive, of moving up since before the financial crisis. In fact, it's making some investors nervous. They have good reason to be worried. The momentum factor has a reputation for producing streaks of outperformance followed by painful corrections. Now that the factor includes many of the market's most important stocks, some are worried that a sudden turnaround could drag indices like the S&P 500 lower. A factor is a grouping of stocks based on a common characteristics. Other popular factors include growth, value, high quality, dividend paying, and low volatility. These are all different groupings. The strongest as of Monday, the MSCI USA Momentum Index, MTUM, has outperformed the S&P 500 by more than 11 percentage points during the first quarter. It is up 20.8 since the beginning of the year, compared with a rise of 9.7 for the S&P. This is the widest margin of outperformance for any quarter since June of, you guessed it, 2008. A few months, but that's not related. That's not why it was outperforming at that point. And it had nothing to do with the collapse, which is mentioned in this article. So no, you got to make sure that you look at causality, not just coincidence. Over the last 2 quarters, momentum has outperformed by an even wider margin of 13.8 percentage points, the strongest 2-quarter streak relative to the S&P. That's what you got to look at. This is the problem. Calling a top when markets are rallying aggressively has proven extremely difficult in the past. Bill Gross said in a recent investing missive, as traders like to say, Momentum begets momentum. Well, speaking of momentum, let's see which way the momentum is going this morning in the markets. We now have Tesla down 329. It was up a little bit in the pre-market, now down 329, momentum down for Tesla this morning, as well as almost all of now the NVIDIA is up, but 5 out of the 7 magnificents are down this morning. You have the Cathie Woods mostly up this morning, actually. They would not be considered momentum stocks, but the Magnificent Seven would be, and they are not doing well this morning. Now, the NASDAQ is actually up 1787. The Dow is up 2197. They are trending slightly upward at this exact moment. S&P up 668. Changing all these to percentages, we have the Dow Jones up 0.06, NASDAQ up 0.11, and the S&P up 0.13, with Tesla down 1.88. Again, I'm not going to buy into the idea that the Tuesday numbers are 100% baked in. I do believe that there's room for Tesla to see a sell-off, but I do believe it will be short-lived because I do believe the other story is going to be bigger. The AI, it's a combination. It's what you got to look at. It's a combination story. It is an AI story. It's an AGI story. It is a story that is going to increase profits. It's a story that's going to increase sales. You got to keep in mind all of those things are going to be true. All right, let's go ahead and take a look at the bond market. I am so sorry. My bond deal is still broken. I don't know what's wrong with the app. I have closed it and opened it a couple of times, but it's still broken. But we do have the 10-year, at least we know that much. It's flat this morning, up 0.2 basis points. I'm going to double check just to make sure. Yes, the rest of that app is broken. We have oil up this morning, based just what I just talked about. Oil up this morning. Now this would be a recent high, 82.36, up $1. Brent also up $1.25. It is now up just $5. So it's $5. That would be as high as it has been recently, up $5, almost exactly $5 at this point. And that is a recent high. So that is reflecting the Russia decision. It's reflecting all the things going over in that part of the world. We have natural gas up slightly, up 1% roughly this morning, at $1.73, which is in the range that it's been pretty much. The dollar gaining a little bit as inflation data looms, according to the headline. We have gold up $13 at $22.25. That might be close to the all-time high. I'm not 100% sure. I don't remember the exact number, but very, very close at $22.25, up $12.90. Copper down barely. Called it really even this morning. You've got the Bitcoin up here, 2,500 points at 71,180, starting to move towards its all-time high. And yeah, there you go. So interesting times we're living in. This will be a unique day. However things turn out today is really not much of an indicator of directionality. What happens today is going to be all about fear and not more about fear today going into a 3-day weekend. In terms of Tesla, I think we could have a rocky and interesting, maybe a lot of moving around over this today, Monday, and Tuesday as we really get to the numbers on Tuesday. All right, I think, let's go back just for fun. It won't be much fun because I'm guessing that Tesla is still down at this point, but let's see what direction it's headed. It is now 381. Yeah, so continuing down at 176. And I'm sorry I didn't bring you more optimism and good news this morning, but we have to be real, right? In the final analysis, there's another lovely cliche phrase. In the final analysis, we do have to be. Listen, yesterday was Wednesday, the Scott Walter analysis yesterday. If you missed that, you missed the most important story, maybe of the week. Great analysis by Scott. If you missed that, there's the card. Looking forward later this morning to Cern Basher coming on, and then in the afternoon show where we take a look at the good news for the day, Bradford Ferguson will be joining us as he does on Thursday. Hey, As always, folks, it is great. I really mean it talking to you.